Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It was nice meeting you on 10th and interacting with you. Let's continue our discussions on incorporation of company and matters incidental thereto. We made some progress in the last class. We made quite a lot of progress, I should say. We were able to see many things, including the procedure for forming a company, and a one-person company. I think we also saw uh, the provisions relating to uh, not-for-profit company, if I remember right. Formation of companies with how it is done, and we saw all this. And what happens when the uh, license is revoked, how to convert such a company into a normal company, okay, etc., etc. So we came up to here and we stopped. So this is where we stopped. It's quite a lot of journey. So I'm very happy. So moving on now. As we already discussed, whenever you have a query, please put it in the query pad. I'll be more than happy to answer your queries. Not as and when they come, but as and when I I give a small break, sort of I stop here, then I look at the query pad, answer all your queries, and then push on. Okay. And process related queries, please don't put it in the query pad, but subject related queries in the query pad. Process related queries about anything, kindly put it in the chat box if you so desire. Suggestion, don't put there also. Maybe take it up offline with somebody in the institute. So we saw what is the procedure for incorporation. At the end of the process of incorporation, we have something called a certificate of incorporation. It's a very important document. The certificate of incorporation is a conclusive evidence from the date of incorporation mentioned in the certificate of incorporation. I repeat, from the date of incorporation mentioned in the certificate of incorporation. So what is written in that certificate of incorporation would be the date of incorporation. Okay. Even though for some reason error could have been done and the wrong date could have been mentioned. For example, the company came into existence today, but the ROC inadvertently puts it as today is 12th. He puts it as 10th. Now, even though the fact is that it was done on 12th, the company's date of incorporation would be taken as 10th for all legal and contractual purposes. To put it differently, any contract entered into by a company between say 10th and 12th would be valid. Notwithstanding that the company was final incorporation certificate was issued only on 12th. Still, since the certificate of incorporation says 10th, it would be valid from 10th. The company came into existence on 10th. This is what it's all. See, this is the problem with law. In law, you cannot use logic. You see, the normal logic doesn't work, right? Logic. Rather, I say law has its own logic. Logic. So that is the logic of law, whether you like it or not. That is how the law works. The idea is the document, once it is finalized, the certificate of incorporation becomes a kind of public document. It is a public document. You will be seeing that. So anybody referring to the company or anybody dealing with the company will go by that document. Therefore, the law wants to give absolute supremacy to that document. And the date mentioned in the certificate of incorporation will be the date of incorporation of the company. From that time onwards, the subscribers to the memorandum and all other persons who will become members of the company. See, The subscribers enter into the first contract. Thereafter, every new person who becomes a member enters into a contract. This is a very important legal point you'll have to understand. The company comes into existence because of a contract or association between the signatories to the memorandum. It's a very, very magic moment. When the law creates a new person, 7 or 2 people sign, and on their completion of the formalities, one more person comes into existence. I mean, even mentioned it in the last class, like from the Yaga, Yajna, Draupadi comes. Like that, from this 7 people signature, suddenly one new company comes, an incorporated body. And that body, it will be a body corporate. It is capable of exercising all the functions of an incorporated company, having perpetual succession, with power to acquire, hold, and dispose property, both movable and immovable, tangible and intangible. It can enter into contracts. It can open bank account. It can sign. On its behalf, somebody can sign checks. On its behalf, somebody can enter into contracts. I use words very carefully. If I say it can enter into contracts, you will ask me, how can an artificial person enter into contracts, sir? There's no mouth, it has no hand, haath nahi hai. No, nothing is there for that. How can it do it? Correct, it can't. Therefore, for anything and everything, somebody should act on its behalf. Later on, hopefully when you come to final exam and you take up Set A, if you decide to take up company law, you will study that the directors are the people who will act on behalf of the company. The directors, the first directors, no, they will act. So when property is to be bought, one of the directors will be authorized to sign the documents on behalf of the company, so on and so forth. Similarly, when contracts are to be entered into, either directors or the directors in turn, the board will in turn delegate it to employees who will be given the power to enter into contracts, sign power of purchase orders, sign checks and all that. And the company can sue and be sued in that name. A proprietary concern, suppose you have a proprietary concern, somebody has a proprietary concern, XYZ and company, all sorts of name. Finally, it is basically X, proprietor XYZ and company. Agreed. So now you can file a suit against X or you can file a suit against XYZ and company. XYZ and company proprietorship business has no separate legal existence. Whereas if it is XYZ Limited, that's it. You have to file a suit only on XYZ Limited, not on the shareholders of XYZ. They are only owners. The person is the company. So your suit should be filed as defendant XYZ Limited. So they have the right to sue and be sued. So if XYZ wants to sue, it has to sue in its own name. It can sue in its own name, right? So this is the effect of registration. Remember, the company comes into existence from the date mentioned in the certificate of incorporation. Even if it is wrongly mentioned, the legal fiction, use the word legal fiction. The law creates a fiction. Fiction is something that is not truth, means not real. But the law creates a fiction called the company. It gives existence to a company. And the legal fiction of the company comes into existence from that date, right? So this was decided in a case, Jubilee Cotton Mills versus Lewis. See, this V basically means, usually this will be written as like this also. It actually means versus. So these are two parties. Jubilee Cotton Mills is one party. Lewis is another party. So there's a case. This could be anywhere. See, this is AC's appeal court in England, 1924. So this case was decided in the appeals court, which means the case was originally filed by Lewis in the Chancery Division. In the Chancery Division, Lewis would have filed against Jubilee Cotton Mills. So it will be Lewis versus Jubilee Cotton Mills. Thereafter, Jubilee Cotton Mills goes on appeal to the Court of Appeals. There, the decision is given in 1924. So that is why Jubilee Cotton Mills versus Lewis. Just for your general awareness, right? So when you read a case law, remember this verses. If you're reading income tax and if you're an expert in income tax, and as you should be, you will come across a lot of income tax decisions. Almost 80% of the income tax decision will be CAT versus somebody or somebody versus CAT. Because, see, the appeal would be preferred to the tribunal against the CAT's order. So CAT will be Commissioner of Income Tax. And see, basically, once you go on appeal to tribunal and once you go on appeal to the High Court, the assessing officer is no longer relevant here. The Commissioner of Income Tax only will be coming all the way. Any appeal will be preferred by the CAT only. So CAT, the jurisdiction of CAT will go. There is a Commissioner of Income Tax versus so-and-so, or so-and-so versus Commissioner of Income Tax, depending who is going on appeal. It will be good. Finally, decision will be given. Check it out. Not two cases, it could be Additional Commissioner of Income Tax. That is, those cases would be mostly writ cases, which will be decided where the concerned officer would be involved, okay, etc., etc. Of course, even in those cases, the other officers will also be joined as respondents, okay, for information. See, if you're not planning to be in taxation, if you're going to be in corporate employment, or if you're going to be in investment banking and financials, or totally in a back office situation in an IT company, etc., then you may not have to know all these legal implications. But if you decided to be in taxation, cutting edge, you want to become an expert in taxation, etc., and which it is good to be, I would say. If you are an expert in taxation, you will earn a lot, much more than you can ever earn by going to a company and getting employed. Though the initial salaries in corporate would be very attractive, no doubt, the long range, an expert in taxation who has got depth knowledge earns billions when compared to the corporate employer, where there's a cap on how much you can earn after something. Because all you have to see, boss, you're only 24 hours. How much can you sell of your time? Whereas a professional who is consulting can sell more of his time by finally cutting it and giving it to others and all that for information. So why I'm saying if you decided to become a tax expert, it's a good idea. But to do that, you should have very good knowledge of law. Okay, so you can't ignore law and become a tax expert. After all, income tax is also one type of law only. Okay, right. So we now move on to the next most important topic, the concept of Memorandum of Association and Articles of Association. These are the two basic documents. For incorporating a company, these two documents have to be filed with the registrar or uploaded to the ministry website. So basically, the memorandum contains the objects, the name. Now, it's the charter of the company. Okay. The article gives the bylaws, the rules. Together, they form the core. Okay. Without MOA and AOA, no company. So, it contains the objects for which the company is formed, the possible scope of its operations beyond which its actions cannot go. It enables shareholders, creditors, and all those who deal with the company to know what its powers are and what activities it can engage in and how the money invested or lent by them would be utilized. See, suppose you are investing in a company, you read the memorandum, you will know what this company is capable of doing, what are the objects. If you don't want those objects, you will not invest in that company. Or tomorrow, you invested in a company because it's an IT company. Tomorrow, if those fellows are going for infrastructure, then you can jolly well say, I don't want to be a member of this company. You are very right. We'll see that a little later. So a memorandum is a public document under Section 399 of the Companies Act. The minute the incorporation papers of a company are uploaded onto the MCA site, automatically, once the MCA site is uploaded onto the MCA site, it becomes a public document in the Section 399, not in your syllabus, of the Companies Act 2013. So once it becomes a public document, any person can see it. You can go to the MCA site and see it. You can view the company's basic data. In case you want more, then they may charge you. If you want copies, they may charge you. But even then, it will be very nominal. And most of it is available and you can download it. Okay. So every person entering into a contract with the company is presumed to have the knowledge of the conditions. So the minute a document becomes public document under section 399, it is presumed. It's a very, very important word. They use the word used is presumed, presumption. What do you mean by that? It means, see, you have not seen, the person has not seen the individual has not seen the MOA, but still it is presumed, it is deemed to have knowledge. That is why this concept is called the doctrine of constructive notice. Doctrine of constructive notice, which means constructive means deemed, notice means knowledge. So the minute a document is filed with the MCA and becomes a public document, every person who is entering into a contract with the company is deemed to have the knowledge. It is as if he has gone and seen. He cannot say, I didn't see, I'm sorry, sorry. You are not seen also, there's a deeming provision. See, how to prove whether they were aware. Somebody was asking in the last class, when the number of members who carry on, what if they say, I'm not aware? Like that. Here they cannot say, I'm not aware. If the gentleman says, I have not seen the memorandum, the law will laugh at him and say, boss, even if you have not seen it, I don't care. It is presumed that you have seen it. Okay, so that is called doctrine of constructive notice, deemed knowledge. This doctrine of constructive notice is applied to all documents filed with the registrar or uploaded on the MCA online portal, which is why non-filing of a document within the duration becomes a tough offense and penalties are there. Because by not filing it, you are withholding information from the public and the doctrine of constructive notice cannot apply. So non-filing becomes a major offense for the company. Later on, when you take up another topic, which is called charges, sure the faculty would tell you about the same notice, the same doctrine. Because when a charge is registered under that chapter, charge means any company wants a loan and any asset of the company is offered as security. That is a charge or an asset of a company is being given as security for a loan, a charge is said to be created. Now that charge needs to be registered with the MCA. You'll be seeing that in the charges. Point is, once we register the charge and it goes into the website, deemed knowledge. So if I'm a creditor, I am taking security of a property. I am presumed to know whether that property has already been given as a security or not. Even if I have not seen the MCA record. But most banks and corporate lenders, they jolly well know this. So what they do, before they enter in, they give the loan to the company. They hire a company secretary to do what is known as a complete search. Complete search of the ROC's records for that company, so that all documents filed up to now and the implications of the same will be reported by the company secretary. Based on that, only they will enter into a contractual arrangement. Right. Now, we move on. See more about the doctrine of constructive notice a little later. You'll see its ugly face again as we move into the topic further. Right now, let's do a small detour and get into memorandum. Defined in section 2, subsection 56. Okay. Defined in section 2, subsection 56, which maybe you studied in preliminary. Said memorandum means the memorandum of association of a company as originally framed or as altered from time to time in pursuance of any previous company law or of this act. See, there are companies which would have been formed even before 1956. There are companies, believe me, 100, 200 Chowgule steamship company. There are very old 1936 companies are there. Companies that were incorporated in 1936. Because there was a Companies Act, 1920 Act was there, very much. 22 Act was there, very much. English law applicable to India. Indian Companies Act 1922, if I remember it. So companies were incorporated under that act. So those companies also, so their memorandum might have been altered under either the old law or the 56 law, whatever. The memorandum means completely amended, up to date document. It is the base document. And along with the articles, it is regarded as the constitution. Together, MOA, AOA become the constitution. Of these, the memorandum is the charter. It brings the company into existence. The association clause is in the memorandum. The signatories sign the memorandum. And when they sign the memorandum, association clause, they come together and company comes into existence. Now, under the new law, the so-called Companies Act 2013, they have given formats for each type of, memorandum. So it depends on what type of company you are forming. Now, I shall presume that you are aware of this. There is companies limited by shares, companies limited by, but still I will explain to you in brief. Explain to you. Now, first of all, you should know that the liability of the members of a company is limited. I make my point again, even at the cost of irritating you. The liability of the members only is limited. The liability of the company is not limited in that sense. Whatever the company has, the assets should be used for paying the entire liabilities. Whatever the company owes, it has to pay. Whatever the company owes, it has to pay. But shareholder, only what he is liable, he has to pay. What is his liability? That is limited. The liability of the shareholder of a company or member of a company limited by shares is limited to the amount, if any, unpaid on the shares. Later on, you will come to a topic called share capital. Therein, again, this will be covered, but there, this aspect will not be covered. You understand? That will be about issue of shares, etc. But the point is, the liability of a member of a company limited by shares is limited to the amount. Let's see if, when we come to liability clause, you'll see this. This is the liability clause of the memorandum. When we come here, you will see, but let me jump the gun and go there. See, in the memorandum, there is a clause called the liability clause. This is the fourth clause. This clause covers the details on the liability of members of the company. Basically, there are limited companies where the liability of the members of the company, note it, Your Honor, members of the company, not the company liability not limited, whereas liability of the members of the company limited. Now, this could be limited or unlimited. There are a few companies where the members' liability is unlimited. Friends, if you keep digging and asking questions in this area, you will be wasting your time. You understand? Many students have noticed will leave the important parts of the lecture. Rather, they will say, sir, why the company is unlimited liability, sir? How many unlimited liability companies are there? To my knowledge, very few. There are some, about 15 or 20 unlimited companies where the liability of the members of the company is unlimited, right? Why should they be formed? God only knows. Who will become member? Seriously mad people. Why? Because why will he have his liability unlimited? Do you know what it means? Suppose the company has a liability of 4 crores and the assets of the company are not sufficient. Then the shareholders' personal assets can be attached. In the case of an unlimited liability company, the liability of the members of the company is unlimited. That means whatever the company owes, they have to pay. Whatever the company owes, the members have to pay. Whereas in limited company, limited by shares or guarantee, whatever the member is liable, he has to pay. Now the liability of a member is limited. So we have seen unlimited company, it is there. Why they have included it in the new law? Because some donkeys formed unlimited companies in the old law. And those companies are still there. Therefore, to facilitate them, this is continuing. Believe me, nobody will form an unlimited company. Assuming some fellows are forming an unlimited company, will you become a member? You tell me. Will you become a member of that company? A company with where the shares, members' liability is unlimited. Will you become? You will say, go to him and keep the phone down. Right. So that is why we don't want to waste our time discussing this. Rather, let's talk about the liability of the members, where it's limited. In the case of a company where the limitation of liability is limited by shares, then very important. See, in case you know it, I'm happy. In case you don't know it, it's high time you remember this. The liability of the members is limited to the amount unpaid, if any, on the shares, or amount, if any, unpaid on the shares held by them. Only where there's a partly paid share, there will be liability for the member. Suppose you are owning fully paid shares of Reliance Industries. Fully paid shares of Reliance Industry. What is your liability? Nothing. Everything is paid, yeah. Suppose the company is wound up, which is extremely unlikely, and they want you to contribute, how much they can ask you? Nothing. But if there's a surplus realized, because you are a shareholder and you are a contributory, you will be entitled to share the surplus. After paying all the creditors, the preference shareholders, every donkey is paid. Finally, what is left belongs to you. You will get whatever share you have. Based on that, you will get. Are you able to understand? No liability. But if it's a partly paid share, that's a liability. For example, Reliance Industries Limited in 2020 AD, during the peak of Corona, they came out with a rights offer. At that time, they wanted to repay some of their liabilities and make the company a little bit free. So Mukeshji wanted money. Who else but his own shareholders? So he went to them and said, look here, any one of you who's having some 16 shares or what, I will give you one share, something like that, he said. If you have 16 shares, I'll give you one rights share at a better price than the market price, whatever it is. But one thing he said was, I don't want the entire money now. They fixed the price at 1,200, 300 something. He said, I don't want the money now. You pay me only 25% now. Another 25% in October. Like that, they may, then in October, like that, they said 50% plus. To my knowledge, I may be corrected by you. Reliance has not made a call. Those shares are still partly paid. 300 and odd rupees paid. Whereas the full value of a share of Reliance is 1,100 something. These shares are partly paid shares. Right? And again, for your information, these partly paid shares of Reliance are listed on the National Stock Exchange and BSE. Listed, not traded. So you can actually buy a partly paid share of Reliance. But who will buy? You tell me. Because if you buy, you have to pay the balance 1,000 and odd rupees. Why? As well you buy a fully paid share. Or you might think, I don't want to invest so much now. Maybe later on, when they make the call, I'll pay. In the meantime, whatever is the price rise, pro rata you will get it. Pro rata you will get. You won't get the full amount. Pro rata you will get. Right? But once they ask you for the full money and you pay it, that's it. You are the owner of a fully paid share. But till then, the liability is the amount, if any, unpaid on the shares. So if one of you is asking me, sir, can you give an example of partly paid shares? I'm so happy I can give you the sorry. Once again. I can give you the example of Reliance Industries. So there are other companies where there is a limitation of liability by guarantee. Company's liability is limited by guarantee. What do you mean by that? See, such companies are, we saw a Section 8 company now, which is a not-for-profit company. Now, such a company will not need much capital because they may be run on the basis of donations and grants. So such a company will go for donations, CSR, or they might go for government grants, etc., etc. Now, in those cases, they don't need share capital money upfront. So such companies will be limited by guarantee. That is, in the memorandum of such companies, the signatories will agree to pay a certain amount. They will undertake to pay an amount to contribute to the assets of the company in the event of its being wound while he is a member, or within 1 year after he ceases to be a member, etc. So, if he ceases to be a member, then his liability will be there only for 1 year after that. For payment of the debts and liabilities of the company or for such debts as may have been contracted before he ceases to be a member, as the case may be, and the cost and charges and expenses of winding up, and for adjustment of the rights of contributories among themselves. But very, very clear. A is a member of a company limited by guarantee. He has agreed to contribute 1 lakh. So his liability is limited to 1 lakh, the amount up to which the member undertakes to contribute. So he became a member by signing the certificate of the memorandum. Thereafter, 6 months later, he resigned. He sold his share, or rather, he ceased to be a member of the company. The resignation was accepted and he left. Now his liability continues for 1 year, but only for payment of debts, etc., which have been contracted before he ceased to be a member. So for the 6 months' time when he was a member, those liabilities he is liable to contribute for the next 1 year. That's it. After that, he is free. After he ceases to be a member, if the company contracts any liabilities, he is not liable. Okay. So this is the concept of a company limited by guarantee. Okay. Company limited by shares. Of course, you have unlimited companies also, which is, I told you now, who will do it? Again, I repeat, company will have to pay as much as it owes. Company pays as much as it owes. Shareholders or members are liabilities limited to amount, if any, unpaid or amount agreed to be paid. So, because the liability clause in each case now will be different. Now, company limited by shares will have one liability clause. Others, they've got different formats for this. Otherwise, it will be the same. Other clauses will be almost the same, no change. But the liability clause alone will change depending on the nature of the company. So there could be a company with limited by shares, 85 to 90%, why I don't want to give any number, but substantial majority of the companies will come here. Substantial majority, you name it, the company would be here only. It will be a company limited by shares. Okay, limited by shares. Listed companies, but for Reliance, all other companies fully paid share, no liability for the member. You could also have companies limited by where the liability of the members is limited by guarantee and not having a share capital. So they don't have a share capital at all. There could be other companies where a nominal share capital could be there. And in addition to that, guarantees could be given. Rare. I have never seen in my life. I'm sure there are very few companies, but without that, this won't be there. But I've never seen. Nor, usually when a non-profit organization comes to me for formation of a company, they don't want share capital. They prefer table D, memorandum of a company limited by shares, by guarantee and not having a share capital. They don't generally want this. Unlimited, I seriously don't know. Okay. But a possibility is given here. So if you want to be a pioneer in that area, you can try to form a company limited by unlimited company, like that. Friends, there is a query pad out there. You can access that also and put up queries instead of why companies publish their financial statement publicly, sir? Poojaji, it is compulsory. Section 138, compulsory you have to file. Financial statement has to be filed. It is compulsory. Why? because a company has the ability to access the public for funds. Once you say you're going to go there, transparency is needed. So any person who wants to invest in your company share should be able to see your financial performance. You might say, let him come, I will give him balance sheet P&L audited. How to trust it? Is it trustworthy? So that is why they want it to be put on a public area where there will be a public domain where any fraud or if they put up, see, let us say that the auditor has given one financial statement and these people put up some other financial statement there, and the auditor will point out immediately, hey, this is not what I gave you. What is this? Like that. Are you able to understand? So in order to bring about transparency in this, there is a need for publication of the financial statements. Okay. So that is something that, but basically as a chartered accountant, this is something given. Okay. See, this query pad, I find it very difficult to move, to navigate. That is why. Meaning of MOA is Memorandum of Association. It's here. You can see it here on the screen. MOA, Memorandum of Association. Similarly, AOA is Articles of Association. We'll see that a little later. Okay. So that's what it is. In company limited by guarantee, guarantors contribute towards asset. As much as I agree to contribute, I've been able to understand. The fare towards assets. Boss, see what it's a good point. Maybe you're a little worried about the wordings. See, these are all wordings taken from the old Lama. See, what do they mean by contribute towards the assets? No. See, good point. Since you're an accountant, you're an expert in accountancy, you'll know that the balance sheet has two sides. Liability side is there, asset side is there. To pay the liabilities, there should be assets. You understand? So when the time of winding up, if there are no assets, then if there is any liability from our friends, the shareholders, where there is a limitation by guarantee, then they will contribute to the asset. That means what? They will deposit the money in the bank and make it into an asset. That's what it means. It takes to contribute to the assets of the company. See, in the event the company is wound up, we have to pay liability. To pay liability, I need asset in the form of fixed asset or bank balance. Now it's not there. So I catch hold of all these guys who have given guarantee and catch the collar and say, give me money. So 1 lakh, 1 lakh, 2 lakh, that will be deposited in the bank. Thereby, they would have contributed to the assets of the company, which will be used to pay the liabilities. This is the meaning of the word, contribute to the assets of the company in the event of its being wound up. So, unfortunately, see, the English that is used in company law is old British English. It's not simple English the way we speak now. So that is why it is like this. Right? So, hope this is clear. And yeah. Company limited by guarantee, guarantors contribute towards the assets of the company. Please explain point under company. I've explained it now. You understood now? So, no. Smriti ji, no. Don't counter question like that. You don't do that. I'm giving one example to make you understand. How do you say public money is not used? They are taking loan, they are taking deposit, charitable contributions. Because the minute you say company, public is involved. You form a company, then public is involved. So please don't counter question. I mean, nothing wrong, but don't confuse yourself like that. Okay, 1. 2, more fundamentally, if you feel that the company need not file its financial statement, please write to the Ministry of Corporate Affairs and ask them to change the law. Because I am teaching the law as it is. The law is making it compulsory for me to file. Suppose the law removes 138, I'll be happy. Why I will file financial statement? Okay, one more thing. Maybe you don't want to be in practice. I want to be I continue to be in practice. One of my main source of income is auditing companies and certifying balance sheets. Mainly they come to me because of this compulsion that the audited accounts have to be uploaded the MCA, they have to be adopted in the AGM and uploaded. You understand? One of the main sources of income is that. So please do not hit me at the root itself and keep on asking why they should file, why they should file. They should file because chartered accountants have to earn their livelihood, audit the companies and file only then the financial statement can be filed. I mean, I've given you every type of answer, my dear Smithy. If you still feel that certain types of companies need not file, but one concession they give, you know what that is? You will study it when you come to accounts of company, you will study it. One concession they're given is for a private company, they say the P&L need not be made public. It has to be filed. It has to be uploaded, but it need not be made public because private companies are going to be operating in a smaller way and the competitors should not know. But such a protection is not there for a public company. Even P&L can be seen. So if you want to see the P&L of a public company, you go to the MCA site. If they have uploaded it, you can see it. Okay. Ceases means stops. Ceases is unfortunately a Sashi Tharoor kind of word for stops. Stop. Stops being. Ceases to be means stops being. Stops to be. This not is no longer. Ceases. Okay. You know, unfortunately, I like English. I love English as a language. And I picked up the language by out of love, reading books, talking continuously, learning the grammar. Okay, so it's a new language now. Think about it. Try to develop a passion for this nice language. 200 years, we have been using this language. The British have ruled us. They have given us a legacy, so much so that when the Constitution of India was framed, they could not take English out of it. English is also one of the national languages of India. Not only India, about easily 100 countries, colonial countries, where the colonization was there. Singapore, Malaysia, they use English. English is one of the official languages of the country. English is still used. Nice. It'll be nice if you start loving this language the way I love it. And I will try to be as asan, simple as possible. Try to follow my English. Chances are you might develop the language or develop a liking for the language, which is in the long run good for you. No? What do you say? In the long run, as an individual, for your own personal growth, don't you think it will be nice if you can speak fluently in English? See, you look at the managerial possibilities, growth possibilities, going abroad. Suppose you have a passion to go to Canada and settle down. To my knowledge, most people in Canada speak English or French. So it'll be nice if you can learn this language. Now, think about it. Try to listen to me as I'm speaking English and understand what I'm saying. I know it's difficult. I know your knowledge of English is less, but still try to follow me. You'll be benefited. Believe me, trust me on this. Even at the cost of getting irritated, follow my English. If you have a doubt in any word, ask me, I will clarify. Some words are long words, difficult. I will give asan or simple words which you can use instead of it. No problem. In the exam, the examination does not want you to write Shakespearean or Miltonian English. They just want you to write the answer in simple words. In case you are writing it in English. So kindly help me to help you to become fluent in English. Okay. Name clause. Now we are moving from the format of the memorandum. Memorandum ka format. See, there is a format for articles. We'll see it later. From table F onwards. FGHI. Same. Similarly, for companies limited by guarantee, not having share capital, etc., etc. So A to E format of memorandum. Now, but for liability clause, all other clauses will be same. Even for companies limited by guarantee, Section 8 company, everything. Name clause. This will contain the name of the company with the last word limited in the case of public limited company. See, in India, a public limited company does not have public limited. It says only limited, SIRF limited. That's all. So the name of the company with the last word limited in the case of public limited company. Or if it's a private limited company, the words will be private limited. So suppose you have a company which is private limited, XYZ Industries Private Limited. It's a private company. XYZ Industries Limited. It's a public limited company. Okay. See, in England, UK, a public limited company is called PLC, whereas the private company is called PTE, private. PTE Limited, private company limited, PTE Limited. Whereas public limited companies are called PLC. Greenlace Bank, PLC. So in India, we have simply limited and private limited. And in the case of an OPC or a one-person company, which is basically a private company, the name should have OPC Private Limited as suffix. Suffix means anything that comes after a word is called suffix. Anything that comes after a word is called suffix. Anything that comes before is called prefix. So let us say that Srikanth OPC Private Limited. That means my one-person company, or Srikanth Enterprises OPC Private Limited. That means that she's on OPC, and it's all OPCs are by definition private limited. OPC cannot be public, only private. So basically, they are treated as if they are private companies, which is why an OPC can convert it to a public company, but a public company cannot convert into a OPC. First, it has to become a private and then convert into a OPC. Private can become OPC, OPC can become private, but public cannot become OPC. Right? But a Section 8 company can become either private or public, no problem. Right? OPC cannot become Section 8 company. OPC cannot convert itself into a Section 8 company. Yeah, other than Section 8, anything you want to do. Private company. Section 8 can become private or public, whatever it was. Enjoy. Just you have to add limited private. The second clause is called the domicile or situation clause, domicile clause, right? That is where the state in which the registered office of the company is to be situated. See, the domicile clause does not give the address. It is called situation clause. It merely identifies the state in which. For many purposes, it is necessary for you to have jurisdictional status. For example, to decide under which ROC will you come, who will be your registered office, who will be your registrar of companies. To decide jurisdiction, we need to know which state you are in. So if you are in the state of Maharashtra, we need to know. So we have to say, if you are a Maharashtra company, only the ROC Bombay or ROC Pune can register you. Nobody else can register you. So the state becomes very important. Once the state or domicile is determined, that state has control over you for many purposes. Later on, we will find that a company can shift its registered office from one state to another state, in which case everybody is having a stake in that company in that state, including the chief secretary will have to give NOC. Okay, before the company can shift its registered office. It's a large company which has, say, more than 1,000 employees and huge operations. If it's going to shift and go, that state government can itself have an objection. Of course, in those days, the Odisha government, then called Orissa, not Odisha, it was called Orissa. The Orissa government had an objection when I think a Tata company wanted to quit and go from Orissa to Jharkhand, now Jharkhand. So they objected and they said, no, it can't go like that. But the High Court of, the Supreme Court very clearly said, look here, your objection cannot be that if he goes away, my sale tax collection will go down. That cannot be an objection. Sorry. That is not his point. He has the right to carry on. See, fundamental right is there, boss. Every citizen, see, the bigger question, whether a company is a citizen. Okay. Now, it is a citizen, but it cannot enjoy all the rights of a natural citizen. But it has the same, see, with regard to violation of fundamental rights, a company is very much a citizen, and when any of its rights are violated, it can file a writ or it can try to enforce its fundamental right. Right. But all fundamental rights you cannot have. Certain, for example, the right to carry on business anywhere in this country available to the company also. So you cannot prevent a company from moving from your state. But if there are other issues, this company has violated any of your laws, has caused environmental damage, and is trying to shift to, then you can object. You have every right to say sorry, do all the damage control, finish everything, and then go. You can't come pollute my state and then go away. That you have right. This a Tata case was not like that. Others are very, they are highly governance oriented. So nothing like that. So the objection given by the Orissa government was, if you go away, no, I think it was Tata Steel, no, Kalinga Steel, correct? Kalinga Steel. Is it? If you go away, your revenue, I will lose revenue. Sorry, that cannot be reason to preventive mistake. Okay. So just giving this background to you. So the state becomes very important. Similarly, the objects for which the company is proposed to be incorporated, very important. These are known as main objects. They cannot be more than 3, maximum. They cannot be more than 5, minimum 3 to 5, not more than that. You can't include anything and everything under the sun. Not only that, the main objects should be having some connection. They should be interconnected. They should be having some, for example, if you say you are going to be in a certain industry, the main objects should be clustering around that industry or objects. Let me be very frank. Suppose you want to set up a sugar plant, sugar. Now, sugar is a very complex industry. You cannot just manufacture sugar. The minute you say I'm going to do sugar, automatically bagasse is there. Automatically pressment is there. Automatically cogeneration of power is there. Sulfur is there. Fertilizer is there. Molasses will come. And from molasses, alcohol will come. Industrial alcohol, rectified spirit, consume, the normal alcohol, human consumption. Of course, distilleries. It's a whole gamut. Are you able to understand? You can't go everywhere. But for a sugar plant, minimum, you can have industrial alcohol, you can have cogeneration of power, you can have all the fertilizer, all that you can have. Because they're all related to each other. And in one umbrella, you can do it. Okay. So the objects, I'm giving a complex example of a sugar plant. Otherwise, you cannot have a cement business and then first object manufacture, import, export trade, otherwise deal in cement and every cement and clinker, blah, blah, blah. Second object, to build houses and to create and to promote residential housing. Sorry, these are totally unconnected main objects. You can't have both. Though you can say, sir, cement is used in construction. Agreed. But still you can't do this. Though, if you want to do it, what you should do, see, for example, Larsen and Toubro is a classic example. Larsen and Toubro is a construction company. They are an EPC. Okay, they are erection, procurement and commissioning company, EPC, and all sorts of construction companies. Some of the most beautiful buildings and most beautiful structures in this country were built by Larsen and Toubro. But that company obviously had a backward integration. They said, after all, one of my main raw material is cement. Why can I not acquire cement factory or build cement factory and acquire and run cement business? So they had a cement division. For them, it made sense because, see, on the reverse side, they were already in construction. For them, cement was needed. So they actually had a cement division up to 2006, when it was found that the L&T cement was that unwieldy activity. They found that it's not their core, and they were not losing money, but definitely not comfortable. So they said, let's sell it off, and they hived it off through a demerger to the Birla Group, AK Birla Group, and BK Birla Group, and that is your Ultratech Cement. The Ultratech Cement company was formed, and into that the cement division of Larsen and Toubro was demerged. It was a cash dealing, where means money, no shares. So we were all shareholders of L&T. We didn't get any shares in the Ultratech. Instead, Ultratech money was pumped into Ultratech by the Birla Group, and the money was paid to L&T. So the division was valued. It was basically a merger in the nature of purchase, where the demerger in the nature of a purchase, where they acquired. The money came into L&T, and why we as shareholders are happy, because L&T is a highly profitable company. If this additional fund comes, it will be pumped into its existing profitable activities and make more money. Sorry for giving all this case study type of examples to you, but my humble suggestion, when you study a dry topic like this, relate it to the real world out there. This law is a living law. This law is being continuously applied 24/7 in our country. There are so many companies that, so you as a chief officer of a company with finance division or handling finance function in a company will definitely need to be aware of this law in depth at a professional level, at an expert level. Of course, there will be company secretaries and all around running around thinking they know. Better that you know it. It's good because when our knowledge of company law is combined with the knowledge of income tax, with the knowledge of finance, with the knowledge of financial reporting. So in this deadly combination, if you also have an in-depth knowledge of company law, you will be an authority in that company. Yeah. Nothing, they will not do anything unless you tell. You will be sort of the go-to guy. Okay, think like that. That is expertise. That is premium. Okay, that's what I'm saying. Domicile means the location, state, origin. Actually, domicile technically means origin, where you are originating. Where is your domicile? Where do you now, or rather, where do you stay? Which state are you in? Domicile. If you don't like domicile, leave it. Yeah. If you don't like domicile, ignore it. I don't like the word domicile. Too difficult to understand. Chalo, chor. Kyon? Because it doesn't matter. If you don't understand, leave it. Rather go for situation clause. Situation you can understand, no? Location, the state in which the registered office of the company will be. So the situation clause will say the state. Friends, still some of you are confused, no problem. See, there can be a company formed with share capital now. Let us say that I'm forming a Section 8 company. Example. The Section 8 company has a paid up capital of 5 lakhs. Capital is there. In addition to that, 6 people say, so this is paid up, the signatories pay. So 5 lakh comes into the company. Are you able to understand? So this company is having a share capital. Now, in addition to that, 6 other people say, in case the company goes into winding up, we will contribute to the assets. Together, they will contribute 10 lakhs. So this is a company limited by guarantee having share capital. Whereas if there is only 6 people saying, in case anything happens, I'll contribute 2 lakhs, 3 lakhs, like that, total 10 lakhs. That is a company limited by guarantee, not having a share capital. Right? So this is what it is. But one thing, it's there in the topic, but these are all remote cases. Maximum only this. So even if you do not understand this much, it is not going to hurt you in any way. But still, since a question has been asked by you, I'm giving an answer. Okay. So object clause, very careful. Because see, be careful with this object clause. Later on, when you come to doctrine of ultra vires, you will see why this object clause becomes very, very important. Also, liability clause we have seen in depth. I don't want to waste your time. Then capital clause, the 5th clause. So name clause, situation clause, object clause, liability clause, capital clause. This is the authorized capital, the nominal capital, the amount of share capital with which the company is to be registered. This is the maximum amount up to which, listen to me, you will clearly understand. This is the maximum amount up to which the company can issue shares to the public or to the shareholders. Maximum. So if the authorized capital of the company mentioned in the memorandum capital clause is 10 lakh shares of rupees 10 each, then the maximum amount which the company can collect nominal value is 1 crore. Nominal value they can collect is 1 crore. That is the authorized capital. Suppose they issue shares, maximum they can issue only 10 lakh shares. So the amount of share capital with which the company is to be registered and the division thereof into shares of a fixed amount. Also, the number of shares which the subscribers agreed to subscribe, which shall not be less than 1 share. So if you are a signatory to the memorandum of a company having share capital, then minimum you have to take 1 share. This will be mentioned in the capital clause, number of shares each subscriber intends to take. Actually, usually it's mentioned below, after the association clause, the capital clause will be mentioned. Now, this is something which you'll find it a little confusing. I will explain. If you still don't understand, leave it here. See, in the case of a company limited by guarantee and not having share capital, okay, obviously, how will I know I am a member? Only by being included in the register of members. That's all. Because there is no register, there is no share capital. I won't be having any share capital. I will apply for membership, right? And my name will be entered in the register of members. That's all. See, the presidency club where I am a member does not have capital. It is a guarantee, limited by guarantee. Therefore, there is no share capital. When I become a member, I don't buy any shares. But I become a member and I get the rights of a member, etc. My name is in the register of members. Whenever the AGM of the company is to be held, I will get a notice. I go. How many votes will I have? That when you come to management and administration, you will understand. In the case of frequently you will find there. In the case of a company having share capital, 1/10 of the total voting power. Or 1/10 of the fixed paid up capital. In the case of a company not having share capital, 1/10 of the total number of members. Like that, all you'll get. So, point is, in the case of a company not having a share capital, members will be known only by those whose name is entered in the register of members. And only they are entitled to participate in the divisible profits. Suppose the company has generated a profit. Who can share? Only those people who are members. So, no company limited by guarantee should give any clause or any section, any opportunity for sharing of divisible profits by a person who is not a member. In case the article, the memorandum contains, the capital clause contains any provision by which a non-member will become entitled to divisible profits, such a clause is void. That's all. It's a prohibitory provision merely to prevent non-members from becoming entitled to any dividend, etc. That is all. Nothing else. If you don't understand it, you leave it. But this is all there is to it. Non-members are not entitled to any dividend or other participation in divisible profits of a company limited by guarantee not having a share capital. Okay. So, I'm giving an example of Presidency Club itself, but then Presidency Club is a Section 8 company where members are not entitled to share in the divisible profits. But suppose there's a profit company where limited by guarantee. That is a very peculiar animal. I've never seen it. A company having profit motive, limited by guarantee, not having share capital. My God, if such company is there, I'd be happy to see it. Okay, so this is simply given as a sort of a condition. So don't worry about that. Because most of it will be, they won't share the profit. The profit will have to be again applied for the objects of the company. So this participation in divisible profits will be possible only if it is for profit. My dear friend, suppose you are forming a company for profit, why you will go for guarantee? You will straight away go for company limited by shares. That's all. Okay. So this is one of the reasons why company law is very boring. All these clauses will be there. Blah blah blah. Imagine when I am teaching you and I am telling you all this itself, you are getting confused. If you are reading it on your own, what will happen? You tell me. Okay, even Hindi, if you are reading it, will be confusing only. Yeah. Anubhav Malik. The guarantee can be called up only at the time of winding up, that too by the liquidator only. The liquidator only can call up the company. During the company, when the company is alive, nothing can be done. Once winding up starts, liquidator will call up. So, we can update nominal value. And whenever you want, you can amend it, Aditya. The capital, see, all these clauses in the memorandum, we'll be seeing it shortly. All these clauses in the memorandum can be amended. Yeah. In the case of a company limited by guarantee not having share capital, as Bhumika says, only membership fee will be paid. Correct. So finally, we come to the sixth clause, which is called association or subscription clause. See, technically, this is five, this segues into five. This is sort of part of five, but still we give it a separate clause status and give it six. Technically, this continues the capital clause. It begins with the words, we, the several persons whose names are given below, hereby agree to form ourselves into a company. And hereby agree to form ourselves into a company and agree to take up the shares mentioned against our respective names. Sort of, I'm quoting almost from memory. Something similar to that will be appearing in the association clause. See, for information, from 1991, I have been incorporating companies. I told you now, more than 2,400 companies I have done. So these are all memorized. So this clause is the contractual partner. Company comes into existence thanks to a contract between the members inter se and the members and the company. The memorandum of association and article of association are together contracts, wherein multi-party contracts. There is a contract between every member and the company and between every member and every other member. This contract is contained in the association or subscription clause. It is called association clause because they agree to associate and become a company. It is called subscription clause because they agree to subscribe for the shares mentioned against their names. So two things they agree to do, right? And where there shall be filed with the registrar within whose jurisdiction the registered office of the company is proposed to be situated, the memorandum duly signed by all the subscribers, etc. So this is part of the process of incorporation. Once the subscribers sign the memorandum in the prescribed manner and the ROC issues a certificate of incorporation, there is a binding contract between each member and the company, and the members inter se. Unfortunately, inter se, Latin word inter se means between themselves. Inter se means between themselves or amongst themselves. So there is a binding contract between each member and the company and between the members amongst themselves. Instead of saying between the members amongst themselves, we say the members inter se, between the member and the company and the members inter se. If any of you feels that all these Latin terms are useless, long-winded words are not needed for me, Asan English is enough, absolutely beautiful idea. Wherever such complicated and stupid words come, I will give you simpler terms. Please use that. Okay? But as a professional, the richness of your language will make a big difference in impressing people. So without being show off, like Mr. Sashi Darur, who is definitely an authority on English vocabulary, okay? But still, if you are able to use words that are, complex, people respect you, okay? Which is why we have to improve our vocabulary. That is all, no other reason. I know it's boring. I know you don't like it. I know you hate to read books. I know you don't like English language, but still try to improve your English. Okay, I moved to the last day. 1 second, yeah. 1 second. Give me 1 minute. I will go back to the slide. I'll go back to the slide. Right, the top. Yes. Now, lastly, we'll be seeing the subscription clause, sixth clause, for a one-person company. See, for normal companies other than OPC, there will be only 6 classes. But for a OPC, there will be 2 additional classes, 7 and 8. 7 is, which means for a OPC, the normal association will not be there. See, in the normal company, The association clause will be having a different wording. We, the several persons whose names and addresses are given below, are desirous of forming a company and hereby agree to form ourselves into a company and agree to take the shares or subscribe for the shares mentioned against our respective names. The same wording. So those wordings will not be there for OPC. Instead, this wording will be there. I, individual, one man, whose name and address is given below, am desirous of forming a company in pursuance of this memorandum of association and agree to take all the shares in the capital of the company. There is no question who else will take it here. You have to take all the shares. So if you have 10,000 shares, you have to take all the 10,000 shares. And also in the 8th clause, you have to mention Sri, Srimati, so-and-so, son of so-and-so, resident of so-and-so, address, aged about so-and-so, shall be the nominee in the event of death of the sole member. This is there only for OPC. For normal company, it stops here. For OPC, this last, we the several won't be there. Instead, I whose name and address is given. That is all. Only difference for OPC. Otherwise, OPC is also the same only. No difference. So that way, this is how it is. So now, we are going to take each clause. Now, this is where, my dear friend, if you are going through the institute material, you will be struggling. Because little bit I'll be going forward and backward to combine concepts and make it easy for you to appreciate. So we'll go to the name clause. Each clause we will see in little more detail. Also, each clause we will try to understand how the clause can be altered. See, somebody was asking very correctly whether the nominal capital can be changed. Yes, it can be. How to change that, we will see now. So, except even the liability clause can be changed. You can change a company limited by guarantee to a limited by shares. Anything you can do. Even a company limited by shares, you can become unlimited, but be careful. Members should agree. Which member will agree? My liability is limited. Now you want to make it unlimited. That's not going to happen. But theoretically, yes, you can do it. Theoretically, yes. But real life, no way. No way. Are we fools to agree? So we will not pass the resolution, pass. Nobody will. So see, which is why I'm saying no. We can have so many questions that are hypothetical. Are you able to understand? Hypothetical. Hypothetical. That means, hypothetical means it is not real. And it is more of suppose if. Suppose it happens like that. So it can. So hypothetical questions, will be very difficult to think. Suppose somebody says, suppose, sir, I get married and I have a wife. Agreed. Suppose, sir, I have children. See, you can have a hypothetical wife, but you cannot create hypothetical children. And are you able to understand? There's only so much you can go with hypothetical propositions. You can't take a hypothetical example and keep on extending it and making it complex and expecting the law to give you an answer. And the answer that you want, that's not going to happen. Okay? When you're using hypothetical examples, be very careful. Don't extend the hypothetical thing beyond a limit. Is the point. That is why when I make this comment, sometimes in professional circles and with clients also, I make the point, sir, you can have hypothetical wife, but you cannot have hypothetical children. See, that assumes too much. So you give me a hypothetical wife about that relationship, you ask a question, when can I divorce, how can I divorce, I can answer. They say, if in case I have hypothetical children, you can't have an entire hypothetical life you cannot live here. Live the life in the real world where it matters. Don't live a life in the hypothetical world where that is not going to happen. Okay. So hypothetical questions are very interesting, but sometimes not practical, impractical. Okay. So, I think in yesterday's class, I might have mentioned about how my name was selected by my parents. The name Srikanth, how it was selected by my parents. See, Ms. Kushi Rao has put a question in the query pad where she says, but that happens after IPO. She's asking, what happens after IPO, madam? Little bit more elaborate, ma. I'm after all an ordinary human being. Maybe there was an earlier question in the chat, which Kushi Rao, is there any question? I didn't see any question. So maybe I was saying something. So conversationally, what I said, now suppose you take it up and say, that happens, how I will know. So just give me a link as to which comment I made, you are asking. What happens after IPO? No, I have to keep double guessing your question, which I would prefer not to do. So I would love to answer your question, Kushiji, but give a little more elaborate. Why? What happens after IPO? Change in the capital clause. Yeah, you can. Suppose your authorized capital is 500 million shares. You went for an IPO, issued the 500 million shares. Now you want to issue another 500 million shares. You jolly well have to amend the article, authorized capital. Yeah. You have to again increase it. Go to the existing shareholders. There's a provision. There's a procedure. Pass a special resolution. That's all. Amend your memorandum articles. File it with the registrar who will approve it and give you a certificate. That's it. You got a new capital now. Even if you're a listed company, you can do that. Just that. Even after IPO, you can do that. If that is what you are asking, I've given an answer. But if you meant something else, Jay, please tell what that is. Then I will answer. Okay. Are you able to understand? Sometimes students write essay type answer in Querypedia, but sometimes they'll be asking in one line. So, I mean, this is not the first time I'm doing this now. They started this online so-called live virtual classes or whatever they call it from time to time. I've been teaching since 2020 AD. 2020 Corona, my granddaughter was born and I flew to Coimbatore where I stayed with my son-in-law for about 45 days. You won't believe when my granddaughter was born because Chennai was totally threatened with Corona and death. So my son-in-law got frightened and he said, you come. So we took our car and all our baggage and we flew from the Jews fled Egypt. We fled and we traveled to Canaan. We traveled to Coimbatore for the promised land and we stayed there. At that time only the institute wanted online teaching. So I applied for the online facultyship. They gave an interview and I appeared before the interview at the ripe old age of 56. I appeared for the interview and I got selected. And now I'm teaching you. Point is, Querypad is not new to me. So that's what. Whenever you ask a question in the Querypad, I keep on watching the Querypad. Whenever a query comes, I'll answer it. I'm used to that. The extra dimension here is the chat box also. So double attack. So one question will come from chat box, another question in Querypad. If all of you can come to Querypad, it will be nice. But don't worry. Once in a while, I will clear the chat box also. Okay. So coming to the point. So from now on, we'll see the name, situation, etc., etc., etc. So the name stated in the memorandum shall not be identical with or resemble too nearly to the name of an existing company registered under this act or any previous company law. Are you able to understand? So before you decide on the name, you have to be sure that there is no similar company, no company with identical or resembling name. For that, what you should do, what you can also do that. You go to the MCA site. There the company's register is there. There you can go and do a name search. It's not, you don't have to pay anything. It's free. So you can put any name and see whether there are companies registered with that name. You can also do the same thing in LLP also. Because the MCA very crazy, See, in this section, they say identical with or resemble too nearly to the name of an existing company. Whereas when they reject your name, they don't not only see company registered, they also see LLP registered. Even if an LLP is registered with a similar name, identical name, they refuse to give you. Sorry, that's how they do it. Though the act is very clear. See, that is one complaint and one problem with our 2013 Act. 2013 substantive law, you cannot rely because there has been extraordinary power transmission by the parliament to the executive. That is, the Ministry of Corporate Affairs is given extraordinary power to make rules and notifications and regulations. Anything they can say. And most of the sections will say, as may be prescribed, as may be prescribed. The minute it says, as may be prescribed, section loses its impact. You have to go to the rule. There you have to see rule by rule by rule. Then beyond the rule, there will be notifications and clarifications. That is why this law has become a little more complicated unnecessarily. Earlier, you were very clear. The substantive law, what I mean by substantive law is the sections, the actual section in the act. That's called substantive law. The rules, etc., are there now. There is procedural law. Rules are there. There is procedural law. See, there is a need for procedural law. I'm not saying no. For example, if it says you have to make an application, the section cannot tell which form. Say, in such form as may be prescribed, or within such time as may be prescribed. That can be prescribed in the rule, no problem. But here the entire procedure is prescribed in the rule. Are you able to understand? The entire procedure is prescribed in the rule. So you cannot read the act without reading the rules. There is where many cases later on, as you get into the buyback and all that, you'll find deposits, etc. You'll find much of it is contained in the rules also, right? So here the rules are there for this, and they have said that their LLP. Also, you cannot have anything that resembles a trademark. But of course, they don't search the trademark registry and prevent. But yeah, still, I think they also run one test on the trademark registry and see whether any trademark is registered with similar name. Okay, but better you do it yourself before you go there, because in case your name resembles an existing trademark, then that guy can object. Later on, you'll see that there can be rectification of name. The ROC will direct you to change your name, alter your name. Why? So you have to be careful. Your name should not be identical. But if you remember my story, my mother wanted to call me Rajnikant. You know who is Rajnikant? He's a superstar. I would have had that name. Today this class will be conducted by CA Rajnikant, not by CA Srikanth. But my father wanted it to be a good man, police officer. But it so happens that in Tamil Nadu, in the movies at that time, there was a villain actor, an actor who was an out and out villain, negative character. The actor's name was Srikanth. Very famous actor, not in the higher level, but at the second tier, he was a villain actor. He was very popular. He was well-known actor, but not like in the popular range, but negative character. Extremely negative character. He was a villain actor. Villain. He'll come only as a villain. Rarely he did. Even he did one movie where he was a hero, but even in that hero role, it was a negative hero. Rajanagam, which is a negative hero. It was not we have people who are always, good, not like that. Negative. So, your name should not be identical with, exactly the same, or resemble too nearly. This is where the problem happens. See, suppose you want to give your company this name. You want to call it Sony Trading Limited. Be careful, because this Sony is a well-known North Indian surname, Sony. Sony is not Sony. Now the problem is there is a Japanese brand called Sony. Now what happens now? If you call your company Sony, then there will be a miscommunication between when the name is told Sony, there will be a confusion by hearing. It's a homophone, where when you pronounce it, it sounds the same. SONI, Sony, both are same when spoken. Therefore, they may refuse to give it to you. Like that, they have many rules. There are many conditions when they will not give. It's there in the institute material. Kindly go through about different conditions. Homophones are there, spellings are there, or slightly different spelling. Of course, there they cannot play. If you change the spelling, they cannot do anything. The pronunciation should not be the same, and so on and so forth. So, and it should not be identical with or resemble. See, that is why many times, clients will come and say, we want to incorporate company. I say, let's do it. What is the name? We want Balaji. I said, no way. Forget it. Go away. Don't even come. Balaji, Venkateswara, Srinivasa, you will never get it. Because already there will be 100 fellows. Yeah. with Balaji, Srinivasa, Venkatesa Polymers, Balaji Industries. Balaji Industries is a big company owned by a famous, it was owned by Magunta uh, group, Magunta group, okay, Subbarami Reddy group. It was a Balaji group, Balaji Distilleries. So many Balaji Industries, so many companies were there in flood. So why I'm saying now, you have to be very careful while forming a company. In fact, that is one of the first hurdles that we have to cross before we go for incorporation. Okay, even now, we are in the process of converting about 3 companies. 3 conversions are going. Nowadays, I do more conversions than incorporations. So I go and the clients come to me who are already existing huge businesses, 300 crore, 400 crore turnover, but they are firms. Mofussil country clients from south of Tamil Nadu or other parts of south who are having firms which have been running for 40 years, 50 years. Now they want to corporatize and access the public funds. So when they come to me, we convert them under Chapter 22 of the Companies Act, right? And while converting also, you have to go through the same process, application, where you have to be very careful. And so we somehow have to get those names, right? Or be such that its use by the company will constitute an offense under any law for the time being in force. See, there are certain names that are prohibited, yeah. For example, terrorism unlimited and all, you cannot have names. Sorry. I mean, it is undesirable in the opinion of the central government. Are you able to understand what I'm saying? Some names are indecent. You cannot have like that, such names and all. Yeah. So what is undesirable? They have a huge list of names, including names that give the impression that you have government sponsorship. For example, you cannot have national, central, national. You cannot have Indian. You cannot have. If you want to have, then you should show that there is a tie-up with the government of India, or whatever it is. So such word or expression as may be prescribed unless the previous approval of the central government has been obtained for the use of any such word or expression. So if you want to form a company called National Polymers Private Limited, no problem. Suppose the plastics, Ministry of Plastics or Ministry of Industry Plastics, which is engaged in promoting plastics, they want you to start this new venture. And they are also participating in it or giving a grant. Then they themselves will say, you call it National Polymers Certificate. But otherwise, no, you can't have national because that would give the impression that you are having some central government affiliation. Any word or expression which is likely to give the impression that the company is in any way connected with or having the patronage of the central government or any state government or any local authority, etc. Okay. Rule 8 provides concrete example when a name would be considered as resembling another. So Rule 8 has concrete examples. It is there in the institute material. You can go through it. Okay, but in the examination, they may not ask you specifically on that. Be aware that certain names have been declared as undesirable. So 8 provides names that are resembling each other. 8A and 8B lay down instances where names are considered to be undesirable. Also, the emblems and names Prevention of Improper Use Act is there. That also should not be violated. Okay, there are some terms which cannot be misused or violated or used in a frivolous or casual way. So that is contained in the Emblems and Names Prevention of Improper Use Act. So first, as you rightly know, you have to make an application in SPICE form INC 32, Part A. Now, you might ask me, what is this Part A? Suddenly you are telling. As I told you, SPICE is a combined form for both name, search, availability, allotment, and also incorporation. So first you go for Part A, right? And get the name. Then you upload Part B, which is for incorporation. Okay. So first you go for Part A, pay 1,000 rupees, and the name is allotted, 20 days it will be valid. It will be valid for 20 days. That's all. Within 20 days, if you don't start the process of incorporation, if you don't upload part B, then the name will expire. Again, you have to start. Okay. So the register, the name of the, so the register for the reservation of a name, the name will be reserved as the name of a proposed company or a name to which the company proposes to change its name. Both are there. That is, I am having an existing company. I want to change the name now. I may be even showing you an example today or maybe in the next class where one of the companies where we have done it, we have I have one of my own consulting companies changed the name from Blue Dot Corporate Solutions. We changed it to Prometheus Consulting. Blue Dot Consulting. We changed it to Prometheus Consulting. So we reserved Prometheus. Prometheus they refused to give, but we got it because there was another Prometheus. But we showed that they are in a different industry and we are in a different industry. So they gave Prometheus. Okay. And in case if they are not giving that name, within 15 days, if you can rectify it or give another choice, they'll consider it. Finally, upon receipt of an application for reservation of name, the registrar may, on the basis of information and documents, for example, if you say you are the owner of a registered mark and they give the proof of registration, they will give it to you. As against a person who is not the registered owner of the mark, but is using it. Okay, between the two, the registered owner will have a title, better title than, so you can get it. They will reserve the name for a period of 20 days from the date of approval of such or such other period as may be prescribed. Okay. Basically 20 days now. Okay. Aditya, you're asking a question to me. Better you go under the Right to Information Act and ask the government of India. What do you say? See, such questions, if you ask me how I can answer, you understand? See, this is what I'm saying. You are asking me, what I will answer, Aditya. You tell me. I don't know. Maybe, see, they might have got the permission. See, we saw now the previous approval of the central government has to be obtained. So you go and see, you can do two things. One, you can go to the registrar site and see, or there is something called the Right to Information Act. This question that you're asking, you are entitled to get the information from the government of India. And the government of India has to give you under the RTA, you go to the MCA site, there'll be an RTA application. You make that application and find out, not only this company, you take about 15 companies' name, which has Bharat and all that, and you send how these companies got the name. It's a valid question. Under the RTA, you will get an answer. But the better person to answer is the Ministry of Corporate Affairs, not me. You understand my point, Aditya? Sometimes, I am very, very practical. Okay. Your question is correct. How Bharat Pay got it? Why should I answer it? Who allotted the name? Ministry. Ask them. I am only teaching the subject. I am not I am not here to defend what all the government has done. If you think something is done wrongly, please write to the government. 100% I don't know. The only guess I can do is I can say it must have been approved by the government under Rule 8. Okay, previous approval has been approved. I don't know. I'm only assuming that it has been. Without obtaining, how they can take it? Yeah, you tell me. Government is a fool to allow Bharat. Bharat will not be allowed. It's an undesirable name. Undesirable means it is not prohibited. If there is some tie-up, whatever, then they will give it to you. You understand? It's not prohibited. Okay. Spice expansion, somebody is asking. They didn't attend last class, I think. Our government, nowadays, they are very much into acronyms and jingles and all that. They love. Whether they do or not, they like to have acronyms. I'm showing you the acronym. They like to give fancy acronyms. If it is not an acronym, our government doesn't like it. So, SPICE expansion is simplified pro forma SP. For is ignored. Incorporating I, company C, electronically E, SPICE. Okay. This is the expansion for SPICE. Got it? So this is how it should be done. Where after reservation of the name, it is found that you have given wrong or incorrect information. If the company has not been incorporated, the reserved name will be cancelled and the fine will be there for 1 lakh rupees. If the company has been incorporated with a wrong or incorrect information, then see, suppose you write to the RTI and they discover that Bharat Pay has been given the name without proper thing, they may do this. The registrar may, after giving the company an opportunity of being heard, direct the company to change its name within a period of 3 months after passing an order resolution. Okay, so they'll give the option, boss, this is not correct. Somehow I've given it to you knowingly. Now Mr. Aditya has pointed out. So please change the name within a period of 3 months after passing an order resolution. Or take action for striking off the name of the company from the register of members itself. I'm sorry, register of companies itself. Or make a petition for winding up of the company. So that's what. Okay. Nice, no? You can do that. If you write to RTI and they find that they are given Bharat Pay without valid reason, you can make them wind up Bharat Pay or strike off the name of the company. At minimum, you can make them change the name. I mean, they're just joking, huh? Don't take it seriously. But sometimes, when students ask questions like this, what can a faculty like me answer? Yeah, you tell me how Bharat Pay name allotted to private company, even its name is resembled to government. Agreed. It's okay. So this is the answer I can give. If you ask such specific questions, how can a teacher sitting in front of a laptop answer these? Needs a lot of investigation. Okay. First, you have to give me the SIN of that number, and I can do a search and then find out how they applied and get it. If I don't know, then if you don't want, I will put up an RTA, Right to Information Act application, just for the fun of it, and see what happens. But remember, if RTA application is made frivolously, the punishment is imprisonment. This is not frivolous, yeah. You are a citizen of the country and you are entitled to know. How did you give Bharat Pay to a private company when it resembles the name of government? You're entitled. Okay. Somebody wants a break. I think I've been talking for the past from 6 p.m. till now, which is 7:40. I have been talking. I'm not tired. It's okay. I'm not tired. You cannot make me tired. I'm 60 years old. I'm not tired. Okay. Okay. So don't worry. Nothing wrong in being tired, especially I'm only talking, you are listening, and that will be very boring. So let's have a break. 5 minutes ka break. Maybe we'll catch up around 7:40, 7:50. We will come back again. Sir, break, sir. Welcome back from your well-deserved break. Let's see some of the questions before we proceed. How to prepare summary notes? Ms. Vanka Gauri is asking from the Eastern region. See, what I used to do, I'll tell you. As and when I'm listening, I used to prepare not notes, but diagrams. I don't know if you are aware of Tony Buzza. There's something called mind map, where whatever you are hearing, you prepare charts, spider diagrams, and charts, and say, pointers. And that's as you read, you make it. Actually, it helps a lot if you can do that. Helps a lot if you can. I take a lot of notes. Even when you're reading, summarize it. Suppose you read a whole paragraph, summarize it. Or better still, convert it into a diagram. In fact, many cases, my PowerPoint presentations are basically notes. I have taken the content and I have summarized it and giving it to you here. Many cases, in many topics, for many topics. That itself is good. You don't have to take separate notes. But still, if you want to make some more notes, then write summarized. See, the idea of taking notes is, as the teacher is teaching, the student forms their own opinion and documents it in the paper. Not simply what all is told, blindly writing. Okay, so that you will write. So here you will take only some straight points, not to be identical with or resemble too nearly resemble. Okay, central government can prohibit like that. So just notes. And these dates are all very important. So you can write it. Name once made available, valid for 20 days. These things, you might have noticed that even I put it in caps. Wherever I use days and all, I give it in caps. Use the same technique when you're taking notes also. So that way you'll be able to prepare notes and keep it. After some time, those notes will become your preparation source. Okay, so well-prepared notes can become your preparation source. So basically, it's the same as what I would have to say. Okay, this is the point. Use diagrams like arrows and all that. How does the restrictions on names help? Basically, the purpose of restriction on name is to prevent passing off. That is, one well-known company may be there. I may try to create another company with a similar name and cheat the public. So this is to prevent such thing. By forming a company with a similar or identical name, I may be trying to cheat the public. So since confidence is there in the company, by using that name, I might be trying to, command the same respect. So that is how consumers are protected, depositors are protected, investors are protected. So there should not be any confusion when the name is told. Is it the same group, that big group? That confusion should not be there. You should not think. So that is why this prevention is there, right? Mm. Articles of the company contains the regulation for management of the company. The article should also contain such matters as are provided as are prescribed under the rules. However, a company may also include additional matters in its articles as may be considered necessary for its management. Okay. So what is to be contained in the articles is by and large given in the rules. Or else, if you want, instead of having your own articles, you can go for adoption of these articles. So the format of the articles is prescribed, but be careful. You can either adopt table F, or in some cases, you can make changes. Where the act is allowing you to use your own articles or your own provision, you can have yours. When you come to management and administration, you can say, unless there is a different provision in the articles. So in those cases, your articles can have. Or if you want to be safe and careful, directly adopt table F. Table F is the format of a company, articles of association of a company limited by shares. Table F. Then you have the whole, that group, you remember guarantee without having share capital, not having share capital, unlimited having, not having, GHIJ. Okay. But very important is table F. So the format of the articles of association of a company limited by shares is in table F. So a company may adopt. I think the important word is may. If it wants, it can adopt all or any of the regulations contained in the model articles applicable to such company. So this applies to a company registered after the commencement of this act. Insofar as the registered articles does not exclude or modify the regulations contained in the model articles applicable to such company, those regulations shall be the regulations of that company in the same manner as if they are contained in the duly registered articles. In other words, if articles are silent, see this whole big paragraph in one line I have given. If the articles are silent, the appropriate provisions of the model articles shall prevail. So in a way, you can notice now, madam, this is the notes. This entire long-winded paragraph I've written in one sentence. If the articles are silent, if the company has got its own articles, it has not adopted table F, it has got its own articles. Those articles are silent on a particular matter. Silent means not, there's no mouth. Yeah, what it means by silent is there is no provision in the articles for this matter. Then the appropriate provisions of the model article shall prevail. Are you able to understand? So if this article is incomplete, there is no provision in it for that, then the appropriate provisions of the model article shall prevail. So model articles are very important. In fact, for most company secretary know table F by heart. They will quote table F, any clause, anywhere they will quote. You and I need not have such expertise in table F, but it's good to refer to table F in cases of difficulty. Whenever you have a doubt, go to table F and find out what's said there. And then check up in that section whether the company can have its own or it has to go by only the model. If so, then you have to be very, very careful. Basic differences between MOA and AOA. Basically, MOA is the charter. It is the contractual part. Whereas the articles is the internal regulations, the bylaws. This is the basic difference. Memorandum controls the scope. The main objects are contained. Any act done by the company beyond the scope of the MOA is ultra vires and void. You're going to see that in the doctrines. Any act done by a company beyond the scope of MOA is ultra vires and void. So, once again. Yeah, just wanted to go back. So anything done by the company beyond the scope of the memorandum is ultra vires. Ultra means beyond. Vires means power. Ultra vires means beyond the powers. Okay. So if a company enters into a contract for something which is not mentioned in the main object, which it is not permitted to do in the main object, that contract is void ab initio. It cannot be ratified even by all the members. But articles are not so difficult. Any act which is done beyond the AOA can be ratified by the members, so long as they are not beyond the scope of memorandum. I'll give a simple example. As per articles, if the company has to borrow beyond 5 crores, it has to get an approval from the shareholders. Example, if it is beyond 5 crores, it has to get approval from the shareholders. The board of directors borrowed beyond 5 crore without getting approval from shareholders. Yes, this is a violation of articles, no doubt. But the purpose for which the borrowing was made was for the company within the object class, within the scope, then the members can meet and ratify. Ratify means after the event has occurred. After the event has occurred, afterwards they can agree. Are you able to understand? Because whatever was done by the directors, they are done as an agent. Now the principal, which is the principal, the company represented by its members, majority. That majority of its members, who is the company, are the principal. They can ratify the agent's act, which is beyond the power. So anything beyond the scope of AOA can be ratified by the members, so long as they are within the scope of MOA. But anything beyond the scope of MOA, sorry, even how can, see, I cannot do it myself, boss. How can I ratify it? Okay. Memorandum is subject to the Companies Act 2013. It cannot contain anything contrary to that, but it is superior to AOA. Whereas AOA is subject to MOA. Between the two, there is a hierarchy. First, AOA subject to MOA. MOA subject to the Act. So if there is any conflict between MOA and Act, Act will prevail. If there is any conflict between MOA and AOA, MOA will prevail. Got it? Obviously, if there is any conflict between AOA and Act, Act will prevail. No doubt about it. Now, sometimes a company, at the time of incorporation, the members of a company may feel that the articles of the company should not be amended very easily. They want to make it difficult for the future members, for the future people who are running the company, to amend or alter the articles. So what they might do, they might provide for entrenchment. It's a new concept introduced in the Companies Act 2013. It's called entrenchment. Entrenchment is the process by which amendment or alteration of a clause in the articles is made more difficult. Okay. Why they do it? Because they feel future members may do something nonsense. So if you want to change this clause, it cannot be done by a simple majority. It has to be done by a superior majority. They might prescribe. Usually, articles can be altered by passing a special resolution. Now, what is a special resolution? I don't know, because it will be taught to you when you come to management and administration. In the meantime, I am going to use this word again and again from now on. When you come to situation clause, special resolution, articles, alteration of articles, special resolution. What is special resolution? I don't know. What I'm going to do, I'm going to give it to you as homework. I'm going to give this as homework, and I'm going to ask you to do a little research. Don't give an answer just now in the query pad. Rather, go for home and refer to the act or whatever you want and find out what is the special resolution. Resolution means agreeing to the proposal. So the members agree to the proposal. So majority has to agree to the proposal. Majority. So to pass a special resolution, you need a special majority. To pass an ordinary resolution, you need an ordinary or simple majority. So I don't want to go beyond this. At this stage, I'm saying I will define for you next class. This stage, I'm going to ask you to do the research. Go and find out either from you can go to, see, this will be defined in management and administration topic chapter. You can go there and find. Okay. So articles can be altered by passing a special resolution. But entrenchment makes it more difficult to change it. So entrenchment means making something more protective. Normally, special resolution is enough. So what they will do is they'll make provision for entrenchment in the articles by saying that specified provisions of the articles may be altered only if conditions or procedures that are more restrictive, okay, are complied with. Normally, special resolution. What is special resolution? You will find out and tell me. Now they want something tougher than that. Okay. So the provision for entrenchment can be made either on formation. At the time of formation itself, you can have entrenchment in the articles. In case at the time of formation you have missed it, now you want to amend it, then amendment to the articles for the purpose of entrenchment in the case of a private company should be agreed to by all the members. Unanimous. If you want to include an entrenchment provision in the articles of a private company and say such and such a provision can be passed only by unanimous resolution, making it tougher than special. Special is itself only majority, a special majority. Now you are saying if you want to amend this particular clause of article, you should have 90% agreeing, 95% agreeing, or all agreeing. If you want to make that amendment in the article should be agreed to by all the members of the company. in the case of private company, or a special resolution in the case of a public company. Okay. So if you want to introduce entrenchment, where the articles contain provisions for entrenchment, whether made on formation or by amendment, the company shall give notice to the registrar of such provisions in such manner and form as may be prescribed. See, beautiful section, well-intentioned, introduced. Nobody uses. Nobody uses. See, when my guru used to say, these are all enabling provisions. Entrenchment you need not have. If you don't want to have, if you want to have, provision is there. Section 5 enables it. It is an enabling provision. My guru, Professor K. Santraman, a great human being and a great teacher, he used to say these enabling provisions are like spittoon. When you go to the railway station, there will be a spittoon where, if you are chewing pan, you want to spit. Ideally, you should spit in the spittoon only. But nobody will use it. Everywhere else, they will spit, not in the spittoon. So enabling provisions are there, nobody will use it. Okay? But it is there in the law. Section 5 is there. I wonder how many people know or remember that there is a Section 5. Okay. Now, entrenchment can be done either in the time of formation and after coming into existence. Private company, all members, public company, special resolution. See, somebody was asking now how to take notes. This is how I will take notes. So that in one shot I will remember. The entire provision I have summarized in one shot. So summarize it and take. Okay. Procedure for entrenchment. At the time of formation, in Spice Plus itself, you can do it. Otherwise, you have to pass a special resolution or unanimous resolution. Then you file MGT 14 within 30 days. Okay. Within 30 days, there will be a form called MGT 14. Whenever you pass a special resolution or a resolution which requires unanimous, you will have to file form number MGT 14 within 30 days. Right. So, as you already saw, Act to override memorandum and articles, etc. And so, in case there is any provision contained in the memorandum, articles, agreement, or resolution, to the extent to which it is repugnant. Okay, I don't like the word repugnant. It's complicated. Any other word? Yes. Unacceptable. Not acceptable to the provisions of this Act. Then it will become or be void as the case may be. Any provision in the memorandum or article which is contrary, even if you don't like the word repugnant, you don't like the word unacceptable, then contrary to. I mean, if you keep on not liking words, what can I do? Yeah. Ultimately, I have to teach in English only. No. So, any word which I give, if you say, no, I want, no, I can't, then some word you have to remember. It will be nice if you can remember repugnant, or if you don't like, then you can do unacceptable to the Act or contrary to the provisions of this Act. Whatever. Against the provisions of this Act. Beautiful. I don't want to use any of these complicated words, sir. Srikant, give me words that are simple, asan, then against the provisions of this Act. Okay. This also you don't like, sorry. Don't. So any provision in the memorandum should not be against or contrary to the provisions of the memorandum, of the Act. If it is so, then it will be void. Okay. Not only in the memorandum, articles, even in any agreement executed by the company or any resolution passed by the company should be well within the law. This section 6 says, save as otherwise provided in this Act, which means what? There are specific provisions in the Act which say you can provide it differently. It means that if any other section of the Act says that article can provide differently, then such provision shall be valid. So section 47 deals with voting power of members. You'll be seeing it when you come to share capital and all, you'll see it. 47. No voting power. So on a poll, one man, one share, one vote. Normally one person, one vote and all. Now that provision is applicable to a private company subject to its articles. So if an article of association of private company says section 47 is not up, AOV will become superior. 47 will not apply. So 47 says the articles, it is applicable. It says I am applicable subject to the articles. So 47 itself says I am not superior to the articles. That one section says But in case articles of a private company don't want this, they can have their own voting power. They can decide their own voting power. What is stated in 47 will not apply. AOA will be superior. But these are cases where very clearly the that section should say subject to the articles. The minute it says subject to, it says I am inferior. That is why section 6 says save as otherwise provided. In the act, if anywhere it is provided differently, otherwise means differently, in a different way, then that will apply. One example given by the institute by us is 47, right? Once the memorandum and articles are registered, they will bind the company and the members to the same extent as if they respectively had been signed by the company and by each member. Not only that, future members will also be bound. Any new guy who becomes a member will be bound by the same contract. Okay. But non-member has no right. A non-member has no right under the MOA and AOA, even if he is mentioned. Okay. For example, the articles of a company contained a clause that on bankruptcy of a member, its shares should be sold to other shareholder at a price fixed by the articles, by the directors. Articles is a contract between the company and its members and the members inter se. B, a shareholder was adjudged bankrupt. His trustee in bankruptcy claimed that he was not bound by these provisions. No. They said, look here, you are trustee because B was the original shareholder. You, on his insolvency, on his bankruptcy, you have become the trustee of bankruptcy. So you are bound by the same. Whatever was B was bound by, you are bound by the same terms. So the trustee was bound. So Borland's trustee was a Steel Bros Company Limited. So the trustee said you cannot sell to other shareholders. See, the articles provided for the sale of his shares to the other shareholders at a price fixed by the directors. Okay. B became bankrupt. Bankrupt means insolvent, could not pay his liabilities. So an assignee or a trustee was appointed to sell the asset and pay. That fellow said, you cannot sell it to other shareholders. I will sell it at a better price. But the company said, no, our articles are binding on B. B was a member. You are only representing him as a member. You are not a shareholder, or you are a third party as well as we are concerned. B is a member. B was bound. Then his estate is also bound. This is a different case where the articles of a company provided that Eli should be a solicitor for life to the company. Okay, the articles mentioned Eli should be a solicitor for life to the company and should not be removed from the office except for misconduct. Later on, he also became a member of the company. So they employed him for a number of years. Thereafter, the company discontinued his services. He said, you can't. Your articles are saying I'm for life. So Eli filed a suit against the Positive Government Security Life Insurance Company. Now, the Exchequer Division, EXD, 1876 case, they dismissed the case on the grounds that, see, Eli was filing a suit. Eli was filing a suit, not as a member, but as a solicitor. As a solicitor, he was not a party to the articles. As a member, he was. But there has been no violation of his rights as a member. There was no infringement of his right as a member. And he has no right as a solicitor because he is not a party to the contract as a solicitor. Okay. Therefore, Eli could not win. Okay, the case was dismissed. Right. The point is, Eli was claiming a right which is mentioned in the articles. Articles is a contract between the members and the company, and the members inter se. Eli is not a party to it. If somebody is not a party to it, to a contract, they do not have locus standi. Locus standi means right to sue. A person who has no locus standi has no right to file a suit. Eli is not a party to the articles. He is a third party as far as articles. His name is mentioned. Agreed. But he is not a signatory as Eli is solicitor. He became a member. That's okay. As a member, if any problem come to me, I'll take it. But here you are a solicitor. Therefore, Eli has no locus standi. and no right to sue. Therefore, we cannot. Okay. Now, I'll quickly go through doctrine of ultra vires. If possible, we'll finish other two doctrine also. Then we can move on. Okay. We already saw ultra vires literally means beyond the powers. Beyond the powers. Right? Ultra vires means beyond the powers. Okay. One second. Ultra vires means beyond the powers. So, opposite of this is intra vires, within the powers. Now, as you know, the memorandum defines the scope of what the company can do in terms of objects. So, a cement company can enter into a contract for purchase of land for construction of a cement factory. Okay. Whereas uh, whereas a sugar company can enter into a contract connected with sugar. A cement company cannot enter into a contract for setting up a computer, software company. That is ultra vires beyond the because the main objects it is not there, right? So when a company or its directors violate the provisions of this act, such an act is unlawful and attracts penalty. An unlawful or illegal act cannot be ratified even with the consent of all the members, right? But an act which is beyond the scope of the memorandum of association is ultra vires and therefore void ab initio. Ab initio means from the beginning. I'm sure you know this, but still, you might have studied it in Contract Act, no? When you're in college or somewhere. If at all you studied contract, you would have studied. Contract of a minor is void ab initio. A contract entered into with or by a minor is void ab initio. Similar. See, doctrine of ultra vires is about capacity. Minor is incapacitated. Not being a major is incapacity. Similarly, beyond the scope of memorandum is incapacity. The company does not have the capacity to enter into a contract which is beyond the scope of the memorandum. And if such a contract is entered into on behalf of the company is protected and the contract is void ab initio. See, this sounds very crude, but if you understand it, see, friends, I am investing in your company, boss. You are telling me, Srikant, you are going to start a company for developing software. I like you and I like the idea, so I invested 1 crore. You took the money and put it in the bank. Then you took some similar money from 5 people, 5 crore in the bank now. Now, suddenly you people meet and you get into a contract for purchasing land, real estate development. Now, I never gave money for real estate development. Now, what you guys do, you go and give that 5 crore as advance to somebody and agree to buy 50 crore worth of land, 10% advance. And you enter into a contract for purchase of land at 50 crore. Now, that contract is void ab initio. You got it? That contract is void ab initio. So the third party cannot enforce the contract on the company. Are you able to understand? 1. 2. Any money paid under a void contract, go back to Contract Act 62. Any money paid under a void contract should be refunded. It is a quasi contract. Any money received under a void agreement should be refunded. So that 5 crore also should be returned back to the company, which means as an investor, my money is safe. So the purpose of the doctrine of ultra vires is to protect me. Don't look at it from the third party's point of view. If you ask me, sir, you entered into the contract, how you can now, sir, how you are asking, sir. So what can we do? One more thing. Remember, doctrine of constructive notice. You are supposed to enter into a contract with this company. You jolly well should have gone to the ROC's office, downloaded the memorandum, seen. And therein you would not have found real estate. Immediately you should have told these brothers, go amend your memorandum and come. Objects, cause and back. Then only I will enter into the contract. Not having done that, who is guilty? The third party. Because there is a presumption that when a document has been filed with the registrar, it is a public document. That is called the doctrine of constructive notice. Are you able to understand? So that protects the company against the third party. Third party cannot say, I don't know. So if you really understand it, doctrine of ultra vires is good. It is meant to protect the investors so that they may know for what purpose the money will be employed. Also the creditors, so that the fund to which they must look for repayment is not dissipated. Are you able to understand? In unauthorized activities, of course, it will cause hardship to an unwary third party. But once again, we humbly submit that third party should have hired an advocate, a company secretary, a chartered accountant to do proper study about this. He should have had a CFO and ensured that he is doing it correctly. So the rationale is competency to enter into the contract. We already saw that. Okay. The competency for corporate is determined by its own charter, the memorandum. The memorandum states affirmatively what the company can do and states negatively what the company cannot do. Corporate life cannot be spent for any purpose other than those specified in the memorandum. This was laid down in a famous case, Ashbury Rail Carriage Company Limited versus Rish. Popular question, repeated question by many students. Should I remember section numbers? Should I remember case law? I would say no. No. If you don't write case law, it's okay. But see, these are all well-known case laws. You understand? It is easier to remember them rather than not write. So if you're asked a question on doctrine of ultra vires, invariably they give you a case study the way I gave. They will say so and so company entered into a contract with the third party. Memorandum was having this provision. Is it valid? Then you have to apply that and say, as per the doctrine of ultra vires, an act which is beyond the scope of memorandum is ultra vires and therefore void ab initio. This view was laid down in Ashbury Rail Carriage Company versus Shea. The purpose of the doctrine. Therefore, the company is protected. In this instant case, the directors entered a contract which is beyond the scope of the memorandum. Therefore, the contract is void and the third party cannot file a suit or the third party will not succeed. So if it will be nice if you can write, but if you still say, I will not remember all these things, chalo, don't write. I'll tell you what will happen. Suppose the question carries 5 marks. You write theoretically correct answer without all these things. Out of 5, you'll get 3.5 or 4, 3, 3.5, 4. Suppose you write section number. Suppose you write, the case law and your handwriting is neat, well presented, you'll get 4.5. If your handwriting is not so good, but then he is able to read and somehow manage, grudgingly he'll give you 3.5. Are you able to understand that gradation? It's up to you. If you want to get high marks, then, but you won't lose because of that. See, you will definitely get 3. If the answer is correct, you will get 3. You want 3. See, I make the point about handwriting, even at the cost of irritating you. What to do, you tell me. People who are good in English, people who have a good handwriting, have an advantage in auditing and law. Yes, what to do? If that same person is also good in numerical, then he will get rank. You understand? He will get very high marks. What to do? You tell me how. If there is any other way, you tell me. Okay. So to become a chartered accountant, you have to be good at numerical calculations, totaling, multiplication, applying formula. Also, you should be good at writing English. If you're writing the exam in English, if it's in Hindi, no problem. Should be good. Even in Hindi, there's a way of writing. See, even in Hindi, there's a way of writing. That the way you write should be interesting. The language should be good now. What do you say? So that is the. So when you read a Shari in Hindi, why do you read that? Because the language is so superior. Am I correct? Galib, Masa Galib, when you read, you feel so elevated. It's the way he has written it in Urdu, so beautiful. But a person like me who doesn't know Urdu, little bit only he knows. I read the Urdu line in English, then I read the translation. Still, if you are a person who can understand Urdu, how much you will enjoy Musa Galib. So like that, language is like that. Okay, once you love the language now, the way you use it will be beautiful. And people are impressed, then you will get more marks. Now, The time now is almost 8:30. Let me pause here and not get into the other next doctrine. We have enough time. Aram say in the next class we'll finish it and we'll summarize it, etc. How should Eli seek justice? No justice for Mr. Eli. Eli shoot on sight. No justice. Yes, that idiot, what he should have done. See this Eli. See that picture. Don't. If nobody is asking why, see, I'll tell you in my mother tongue, Eli means mouse. My mother tongue. I mean, I think even in Malayalam, Eli means mouse. Though this Eli is not that Eli. See that Eli, what he should have done, he should have drawn a separate contract. Correctly said, Supriyaji. And in addition to the articles, the fellow should have made see, once the company comes into existence, there would be an independent board now. Eli should have entered into a contract with that independent board by which he should be appointed for life. Then they can't do anything because they are bound by the contract. Are you able to understand? So you have rightly arrived at the conclusion correctly. How can Eli seek for justice? He should have drawn a separate contract. Correct. Absolutely correct. Now you are talking very intelligently, Madam Supriyaji, like a chartered account. So now you know how to advise your client not to make stupid mistakes like Mr. Eli. Of course, Eli made that mistake in 1876, long, long ago. Okay, but still, even though there are fools like Eli, don't worry about that. There are enough fools going around. They won't listen to the auditor. They won't listen to good advice. They will do whatever they think is right, then get into trouble. Let us see any chats are there. Uploading the notes, I'll do it, Manam. Allow me to see on Monday we'll have one more class now. With that, the entire notes will be over. Inshallah, on Monday I will upload it. Monday night or Tuesday I'll upload. Entrenchment means picking deep and holding. So making it tough. So alteration in the articles, if you want to do, they want to make it. So entrenchment in this context means to make the amendment tough. That's what it means. Normal meaning entrenchment is to hold on or to big and hold on tightly. Entrench oneself. Okay. Trench basically is a strip of a hole, which is in the form of a strip, a trench. What is it, about 4 feet hole running for about 10 feet. So that's called a trench. In the First World War was fought in the trenches. The soldiers used to hide in those 5 feet or 4 feet trenches. Occasionally they'll come out, shoot, go back again. Dirty war, First World War. Okay. So to entrench means to dig in and stay, not to move, making it tough. That's what it means. Sorry, this is the best explanation I can give. Wonderful. So happy for you. We will stop now and say goodbye to each other till we meet again on the thing. One or two more questions are there. We have, can we draw diagrams? No. You cannot draw diagram in the exam. You use diagram to understand the subject and use it. You use diagrams to understand the subject. No, don't draw a diagram in exam. Not in exam. What I do is I draw a diagram to remember and then write. Based on the diagram gives me the flow, then I write using the diagram. Try to avoid drawing diagrams in the exam, please. Many examiners don't like diagrams. Right? Generally, examiners don't like diagrams. But diagrams are used to internalize, to make it, to remember easily. Then use it to write an exam. This is my humble submission to you. Okay, fantastic. Thank you. Bye. See you on Monday. Bye. Over. Good night.